Come on down. We are back once again with the Hollywood trades. Nothing fancy on this one. Just getting a request. A lot of people are wondering about imbalances, the imbalance ranges. Um, it's not that hard. A lot of people just haven't had the practice to do it. You see it on my chart sometimes, and I'm just gonna make it real quick on this one because it's really not that hard. Todd, this is for you, buddy. Uh, it really has to do with an observation. It, you you can almost skip you can almost skip uh, imbalances, but imbalances are particular. Sometimes they're very particular, like how this one dipped into the mid range. The mid range does something with an imbalance, so that's that. But it's really the impulse candle. If you take an impulse candle and for the most part, it's pretty much the impulse. When you see an impulse candle or a long bodied candle, you can almost highlight that candle uh, and expect price to use it as a retracement zone and a correction zone, using the previous candle's retracement range or accumulation range, right? Like this is an accumulation range or retracement range. So you'll impulse through that previous retracement range, break it, and then use the candle. Or it's a combination of the candle range plus the retracement range. That's the first part. That's what you would call the observational. Like if you were new and you didn't understand correction, you could almost do it that way, right? So every impulse candle range or just impulse range in general, but I like to use candles themselves, right? And it'll price will, right? So even if you didn't know what the imbalance was, you could cheat it and just take the whole impulse candle range, right? And then it's crazy how sometimes it'll just use that like that. And that's the, you know, this is the right, boom, boom, and then go. But the imbalance range is a little more particular. The imbalance range is find your impulse candle, right? Your long bodied candle. Mark the wick to the left of that candle, and then mark the wick to the right of that candle. That's your imbalanced range. And pretty much what it is it has something to do with EA, auto traders, and bots leaving orders, at the wicks of these candle levels to the left and the right of that imbalance. And excuse me, kind of early. Haven't had my coffee, but I literally saw this as soon as he messaged 10 minutes ago. So I decided just let's go ahead and get it out the way for you guys. This is pretty much, I could name this video something astronomical so people stumble upon it and want to click it better. Um, but pretty much this is it. Imbalances will change your trading career. And it's almost true. It could be true in an instant because once you see them, right, you can't unsee them. Like this one never got hit, so I wouldn't even have been interested in that one. But once they print, you can pretty much say that you can just buy from there. Like once a long bodied candle prints, especially um overtaking a previous bearish, like this is a bearish, this was the start of a bearish imbalance there, right there. and then this is the low of that bearish imbalance, right? So let's go ahead and I always mark it with a triangle, with a rectangle. Um, just just because that's what I'm used to. That's how I like to see it anyway. I'll say that. Um, so pretty much, this is how a lot of people will mark it. A lot of people will mark the range like that. Like that's a bearish imbalance range. It covered the whole range. You'll see that a lot. We're in an uptrend. So when you get to the retracement range or accumulation ranges like these, like I said, if you're in an uptrend and you get up and then you get an accumulation or retracement range, price will often come down to use. A lot of people know about that already, and that's how a lot of people trade. They'll break and retest of those accumulation or retracement ranges, and then you go from there, right? Sweep the low. That's liquidity here. That's take profits of shorts, right? So you get a long, boom, you get shorts, come in, take profit, and then you hit, more take profit. Then you find a level that will not allow price to close below it, like this one here, and then that's it's very sensitive to things that you can watch and price, and it has to do with open closes, accumulations, retracements, impulse ranges. That's pretty much that. But where's another example? Another good example is here, right? This was an imbalance range, and it won't always use the range as a neatly defined correction like how we're seeing here, and maybe what we'll see here. It won't always do that. It may use that range as just a correction of the range. It won't close through it though. Like right here, it went about halfway actually, and this is why I like the rectangle markup, is because um I can put that 50%. I can put that 50% inside of it like that, and then boom, boom, and get up out of there like that. Um, but an even better markup for some people might be a channel markup. Let's see here. Um, I'm gonna delete all this anyway, but the channel markup could be a really neat markup for an imbalance as well. If you don't like the whole box, because sometimes what I don't like is that it's an actual box instead of just giving us an open-ended zone. Um, I don't know. Visually, I like the box. Just it's bolder. To me, it's bolder. But I may start shifting to channel markups here. It looks cleaner. Excuse me. I've been using these boxes for so long. Once I learned how to do it, I've just been using those boxes for so long. But yeah, that's pretty much almost every instance of how an imbalance will be used by price. Um, Pretty much, you know, it's pretty much that. Like this one, they won't always, um, it won't always use this as the entry. Um, Sometimes it can go lower. Um, right below the imbalance is sometimes what you'll see. Like in this instance, it cleared it and then it threw a body, because sometimes it likes to throw a body into it. For some reason, wicks and bodies register different when it comes to corrections and imbalances. Um, Sometimes it just likes to throw a body over there, and then you'll see. The key is that it comes back above it, right? And then it should go and print more imbalances like it printed. Sometimes you can't even mark them because they're so small, like this one here, this to this, and it never got. Once it prints it, that's pretty much saying, right? And then we closed above this bearish manipulation or imbalance right there, right? And so that became the threshold that sometimes if it goes, and this is a balanced price range. This is what I call a balanced price range. So a balanced price range can be this, where it balanced it, right? Boom, 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 boom. It's what the master says, a paint roller type of thing, where it's like you're like applying paint right through that range and then coming out of it. So pretty much this right here is also a balanced price range. As you see, balanced price range, entry, candle range, theory, exit. Um, but that's pretty much that, bro. I hope that makes sense to you guys. This of course you can study this for life, right? But and there's all type of different, types of rebalanced, right? Because this one right here got rebalanced as well, but only a certain way, right? Right. So it corrected it and then continued going. So that's pretty much the mechanic that you can kind of abide by with imbalanced ranges. It's just an observation. Some people use them to actually trade. I like to see, if I do use it to trade, I like to see the candle that's guarding the imbalance right here. In this case, I like to see this candle not closed over when I trade them. Like the best ones are when it does correct and then pull back below the initial candle, right? And then those ones are explosive, but it can throw bodies in here and close over and then come back out and then close under, and then you can trade short from there. First target, and then of course second target after that, it would be there. I wouldn't consider too much else in that short from that imbalance right there and right there, because after that, as you see, right, then we start trying to recover the whole range. Boom. Had trouble with this block right here, but that's pretty much it. There was an imbalance here, and that's what price ultimately, that's what I have marked. This is a reaper imbalance, but that's a subject for another day. But pretty much you'll see price want to come right and correct these imbalances, right? That's pretty much what you can expect out of price, right? And then we'll say it like that. And then right as you rebound, as you corrected it, right, you now we're stuck between a previous imbalance, right, and a new imbalance. And so that's your consolidation. Price will most likely not have enough volume to get out of this zone. Yeah, without over average volume, above average volume, you usually won't get out of a zone like this. It was neat to study it, though. It's neat to watch it as it develops. In that aspect. But that's pretty much it. If you guys have any more questions, let me know. This was a good one for a lot of people I know. Share this with folks too. It's interesting for most people.